Ever feel like you're just swimming in a sea of information, and you just need someone to point out the
Oh,
interesting
yeah,
bits?
there's so much out there.
Well, that's what we're here for. Today, we're diving deep into the latest financial results from Take-Two Interactive. You know, the company behind some absolutely massive gaming franchises.
That's right. We've been digging into their Q4 and full fiscal year 2025 earnings call notes, the official press release, and a financial news summary as well, trying to piece it all together.
And our mission, as always, is pretty straightforward. Cut through all the, financial jargon, give you a clear, concise understanding of how Take-Two's doing and maybe what the future holds.
Exactly. Just the key stuff.
So let's get into it.
Yeah.
How did Take-Two actually do overall in this past fiscal year 2025?
Okay, so for the full year, which ended back in March 2025, their net bookings landed at $5.65 billion.
Okay.
What's really interesting is that this number was right at the very top end of their own guidance range.
Oh.
Yeah, and it represents a pretty healthy 6% increase compared to the year before.
Net bookings, we hear that term constantly in gaming. Can you maybe break down what that actually means for us?
Sure. Think of net bookings as essentially the total dollar value of all the products and services they sold during the year.
Right.
So that includes digital downloads, physical games off the shelf, all those in-game purchases, even licensing deals. It's really a core measure of their total sales activity.
Got it. So $5.65 billion in total sales value. What about the official revenue figures? The GAAP ones.
Right, the GAAP net revenue. That follows the standard accounting rules, That also saw a pretty solid increase, up 5%, hitting $5.63 billion.
Okay, so the top line numbers, bookings and revenue, they look pretty good. Great there.
Yeah, on the surface.
But I remember seeing headlines about a pretty significant net loss, right?
That's the other side of the coin, yes.
Yeah.
While sales were up, Take-Two reported a really substantial GAAP net loss of $4.48 billion, which works out to $25.58 per share. And this is like a really crucial point, the vast majority of that loss. It wasn't really about their day-to-day business operations struggling.
Oh, interesting. Okay, so what caused such a huge loss then?
Well, the main culprit was a massive $3.55 billion charge related to goodwill impairment.
Goodwill impairment.
Yeah. And on top of that, they had another $176.3 million charge for acquisition-related intangible assets. Basically, these are big accounting adjustments. They reflect a change in how the company sees the long-term value of businesses or assets they acquired in the past.
So it's more like looking back at past deals and saying, okay, maybe these aren't worth quite as much on paper now. Less about current sales being bad.
Precisely. It's an accounting perspective shift. And that's actually why looking at a metric like EBITDA becomes pretty important here.
Right.
For the full fiscal year, Take-Two reported a positive EBITDA of $199.1 million.
EBITDA, okay. Earnings before interest, taxes, depreciation, and amortization. Why do companies, especially in tech and gaming, like to point to that number?
Exactly. Well, by highlighting EBITDA, management tries to give you a clearer view of the company's core operational profitability. It essentially strips away the noise from things like how much debt they have, their specific tax situation, and importantly, those non-cash charges like depreciation and amortization, including impairment.
Okay.
So it lets you see, or at least they argue it lets you see, the underlying health of the business operations before those other financial layers are factored in. Investors often use it for that reason.
That makes a lot of sense. Provides a different kind of picture.
Yeah.
Okay, let's zoom in then on just the last quarter, Q4 of fiscal 2025. How did they wrap up the year?
Q4 was actually a particularly strong quarter for them. Net bookings jumped up by an impressive 17% to $1.58 billion.
17%, wow.
Yeah, and that actually beat the high end of their own forecasts for the quarter.
I assume the revenue numbers kind of followed that trend.
They did. GAAP net revenue was also up significantly.
Yeah.
13%, hitting $1.58 billion as well. Again, better than they had estimated.
Okay. Strong finish operationally. But the net loss story continued in Q4 too, didn't it?
Unfortunately, yes. For Q4 alone, the GAAP net loss was $3.73 billion. That's 21.08 cents per share.
Wow.
And just like the full year picture, this was overwhelmingly driven by those significant impairment charges we already discussed.
Okay, so those big headline loss numbers are really tied tightly to these specific accounting adjustments.
Got it.
What other key things stood out from Q4?
A really big one was the continued strength in what they call recurrent consumer spending.
Ah, yes. The microtransactions, DLC, that sort of thing.
Exactly. In Q4, that category grew by 14% compared to the same quarter last year, and it accounted for a huge chunk, 77% of their total net bookings for the quarter.
77%.
Yeah, and if you look at the full fiscal year, it was also up by 7% and made up an even bigger slice, 80% of their total net bookings for the entire year.
80% for the year from spending after the initial game purchase.
That's impressive.
What exactly falls under that recurrent spending umbrella?
So it's basically all the money players spend within the games after they've bought them. Think virtual currency like GTA dollars or NBA VC.
Mm-hmm.
Add-on content like story expansions or map packs. In-game items could be cosmetic skins, could be performance boosters, and even revenue they get from in-game advertising, particularly in mobile.
Right.
It really shows how much their model relies on keeping players engaged and spending money over the long term. It's a fundamental part of the business now.
Definitely seems like keeping people playing and paying within those ecosystems is job one. So which specific games were the heavy hitters, the biggest drivers for these bookings and revenue numbers?
Okay, looking across both Q4 and the full year for net bookings, the big names won't surprise you too much. The NBA 2K series, both 2K25 and 2K24,
Yep.
The absolute juggernaut that is Grand Theft Auto V and GTA Online.
Still going strong.
Incredibly strong. Then you've got their big mobile hits, Toon Blast and Match Factory, also Empires and Puzzles, and of course Red Dead Redemption 2 and its online mode. Also contributing significantly were Civilization 7, WWE 2K25, Words with Friends, Toy Blast, and their whole portfolio of hyper-casual mobile games from Rollic.
Quite a list. Were there any, interesting differences between the top games for net bookings versus the top games for GAAP net revenue? Sometimes those differ slightly, right?
Yeah, there were a few subtle shifts, mostly due to how revenue gets recognized over time under GAAP rules versus when the booking happens. For example, NBA 2K24 seemed a bit higher on the full-year GAAP net revenue list compared to the net bookings list.
Okay.
And Civilization VII also popped up as a top contributor for full-year GAAP net revenue, again likely reflecting the timing of its release and revenue recognition. But largely the same core titles drove both metrics.
Interesting nuances there. Okay, let's break it down by their different publishing labels. How did, say, 2K perform in Q4?
2K had a really fantastic quarter, actually. They had several successful launches. Sid Meier's Civilization 7 came out, and we already mentioned it was a top contributor. They also launched a VR version for MetaQuest.
Oh, cool.
WWE 2K25 launched to a really strong critical acclaim, got an 84 Metacritic score on Xbox Series X.
Nice.
And PGA Tour 2K25 also did well, scoring an 80 on PlayStation 5. So good launches across the board for 2K.
And did that recurrent spending trend we talked about show up in these new 2K releases?
It absolutely did. For WWE 2K25, they specifically called out a 20% increase in recurrent consumer spending compared to the previous year's game in the same time frame.
Wow.
And PGA Tour 2K25 also saw, quote, significant growth in that area. Plus, looking ahead for Civ 7, they mentioned it's coming to the Switch too with mouse controls. That could definitely broaden its reach.
Mouse controls on Switch.
Yeah.
Interesting. Okay, now, the big one. Rockstar Games.
Yeah, Rockstar. Well, as you'd probably guess, both Grand Theft Auto and Red Dead Redemption franchises just kept exceeding forecasts.
Unbelievable.
Get this. Grand Theft Auto V has now sold in over 215 million units worldwide.
215 million. Just staggering.
It really is. And what's maybe even more remarkable is that recurrent consumer spending for GTA V still grew by 5% year over year.
Even now. How?
Mostly driven by the constant stream of new content for GTA Online and the continued success of their GTA Plus subscription service. People are still deeply engaged.
Clearly.
And don't forget Red Dead Redemption 2. Its net bookings also saw really impressive growth, up 23% year over year in Q4. That franchise still has legs.
Absolutely. And then there's the elephant in the room. Grand Theft Auto 6.
Right. The anticipation is just, well, off the charts, isn't it? The release date is confirmed now, May 26, 2026. So that falls into Take-Two's fiscal year 2027.
Still a way off, but the hype is real.
Oh, it's immense. Trailer 2, when it dropped, it became the most viewed video game launch ever. Racked up over 475 million views in just 24 hours across all platforms.
475 million.
In a day. And Trailer 1 wasn't exactly shabby either. 93 million views in its first 24 hours just on YouTube. It broke records too.
It's just a cultural event at this point.
Totally. Even the music they used in Trailer 2 saw this massive surge in streams on Spotify. Take-Two keeps emphasizing how ambitious and complex GTA 5 is going to be. They're setting expectations incredibly high.
Yeah, you can feel the pressure and the potential there. Okay, what about the third pillar, Zynga, and the mobile side?
Zynga kept up its positive momentum. Match Factory
Yeah.
was a standout, continued to beat their expectations, and is now generating profit.
Good to hear.
Toon Blast had a great quarter, too. Net bookings grew 7%, which was its largest quarter since Take-Two acquired Zynga.
Nice turnaround or continued growth there.
Yeah. And their hyper-casual studio, Rollic, launched a game called Color Block Jam that scaled super fast, became a top 10 download and top grossing game in the U.S. Apple App Store, and hit profitability in just 4 months.
Wow, that's quick.
Very quick. They also mentioned seeing stabilization in Empires and Puzzles after making some tweaks to the in-game economy and adding new features. So mobile looks generally healthy.
Sounds like a really diverse portfolio, firing on quite a few cylinders.
Oh,
Okay, let's pivot and look forward. What's the initial guidance, the outlook for the current fiscal year, fiscal 2026?
so their initial projection for net bookings is a range between $5.9 billion and $6.0 billion.
Okay.
If you take the midpoint of that range, it represents about 5% growth compared to the fiscal year that just ended.
Still projecting growth then. What about that crucial recurrent consumer spending piece? What are they expecting there?
Interestingly, they're forecasting recurrent spending to be roughly flat compared to fiscal 2025.
Oh, flat, after all that growth.
Yeah, relatively stable. But it's still expected to make up a huge portion, around 76% of their total net bookings.
Okay.
Their forecast assumptions are kind of interesting, too. They expect high single-digit growth for NBA 2K's recurrent spending, but they're actually assuming declines for their mobile portfolio overall and for Grand Theft Auto Online.
Declines for GTA Online? That's notable. Suggests maybe a shift in where that spending growth is coming from, or maybe some normalization.
Could be. Maybe anticipating some player shifting focus, or maybe just being conservative. But it does mean they need other areas like NBA 2K or new launches to pick up the slack to hit that flat target overall.
Right. Which specific games do they expect to be the biggest money makers in fiscal 2026 then?
The largest contributors to net bookings are projected to be NBA 2K, the Grand Theft Auto series. Even with that expected dip in online spending, the base is huge. Toon Blast, the new Borderlands 4,
Oh, Borderlands 4.
Match Factory, Empires and Puzzles, Words with Friends, the Red Dead Redemption series, and Zynga Poker.
Okay, a mix of old and new there. How does that $5.9 to $6 billion in expected net bookings break down by label?
They gave approximate percentages, roughly 45% from Zynga.
Wow, almost half from mobile.
Yeah, significant. Then about 39% from 2K and the remaining 16% from Rockstar Games. Really highlights how vital Zynga is to their overall financial performance now.
No kidding. What about other financial indicators like cash flow or investment plans for this year?
They're projecting operating cash flow to be around $130 million, and they plan to spend about $140 million on capital expenditures.
Okay. What's that spending for?
Mostly focused on enhancing their game development technology and also some office build-outs and upgrades. On the GAAP side, they expect net revenue between $5.95 and $6.05 billion, with total operating expenses landing somewhere between $3.78 and $3.8 billion.
All right, lots happening on the financial planning side. Let's talk upcoming releases. What specific games should we be watching for?
Definitely some big ones on the horizon. Coming up pretty soon, August 8th, 2025, is Mafia, the Old Country.
The prequel, right?
Yep, from 2K and Hangar 13, set in 1900s Sicily. They said pre-orders got off to a strong start after the trailer reveal at PAX East. Then, not long after, September 12th, 2025, we get Borderlands 4 from 2K and Gearbox.
Huge anticipation for that one.
Yeah, they mentioned really positive community reaction and strong Steam wish lists already, especially after the gameplay reveal during that PlayStation State of Play.
Makes sense. Anything else coming soon? Mobile, Switch.
Yep. WWE 2K Mobile is slated for Netflix sometime in the fall of 2025.
On Netflix. Interesting platform choice.
Yeah. And Civilizations of Seth is hitting the Nintendo Switch 2 very, very soon, June 5th, 2025. Plus, you can obviously expect the usual annual sports updates. NBA 2K26 and WWE 2K26 will land sometime during fiscal 2026.
Right, the reliable sports titles.
Yeah.
And we can't forget the one looming largest.
Looming very large, yes. Grand Theft Auto 6 remains on track for that May 26, 2026 release date.
Okay. Anything else further out that they mentioned?
They touched on a few other things in the pipeline. Borderlands 4 is also planned for the Switch 2 at some point. There's CSR 3, the next iteration of that mobile racing franchise. Judas, the game from Ken Levine's studio, Ghost Story Games. And something called Project Ethos, though details are scarce there.
A very packed schedule ahead, it seems. Okay, let's quickly touch on the geographic and platform breakdown. Any major trends in where the money's coming from or how people are buying?
Yeah, looking at both Q4 and the full year, it's pretty consistent. The United States is the biggest market, bringing in around 60–61% of both net revenue and net bookings.
So roughly 60/40 US versus international.
Exactly. And in terms of how people are buying, digital is just overwhelmingly dominant. Digital online channels accounted for something like 96–97% of both net revenue and net bookings. Physical is a very small slice now.
Wow, 96, 97% digital. That's huge. And platform-wise,
Mobile continues to be the king for Take-Two overall. It accounted for roughly half, about 50% of both net revenue and net bookings across the year.
half their business is mobile.
Yep. Followed by consoles, which make up a significant chunk, and then PC and other platforms make up the rest. It really underscores just how crucial their mobile strategy, largely through Zynga, has become.
Okay, so wrapping this all up, it sounds like fiscal 2025 was, well, a bit of a mixed bag. Strong underlying sales, strong net bookings, especially driven by that recurrent spending.
Yeah, operationally quite solid in many ways.
But overshadowed on the bottom line by those very large GAAP net losses, mainly due to those accounting charges, the impairment stuff.
Exactly. The headline loss number is jarring, but the operational metrics like bookings and recurrent spending tell a somewhat different story.
And looking ahead, the outlook for fiscal 2026 seems cautiously optimistic, projecting growth in bookings, even with some shifts expected in recurrent spending, and obviously massive anticipation for future releases, especially GTA VI down the line.
That sums it up pretty well. They've shown resilience in their core franchises and mobile portfolio, and the pipeline, particularly with Borderlands 4 this year and GTA VI next year, holds enormous potential.
You know, it really makes you think. We see this huge shift towards digital games as ongoing services, this focus on recurrent spending. What does this whole financial picture really suggest about where the games industry is heading, how we consume this stuff? And what does it mean when a company can post these huge accounting losses but still show strong operational numbers like net bookings and have Wall Street excited about the future? It's definitely something to chew on, isn't it?
It absolutely is. It raises questions about value, engagement, and how we even measure success in this industry now. And if you, the listener, want to get into the real nitty-gritty, all the detailed tables and transcripts are usually available on Take-Two Interactive's Investor Relations website.
Great point. Definitely worth checking out if you want the full picture.